Okay guys, let's do October-November question 1. October-November question 1. It's about bank reconciliation. Okay, so we have question A, B and C. Okay. Question A is asking us to complete the cash receipt journal and the cash payment journal. Question B is asking us to prepare the bank account in the general ledger. Question C is about preparing the bank reconciliation statement. Okay, so now when you prepare the cash receipt journal and the cash payment, this is what you do. Okay, first of all, they will give you the totals here, the totals in the cash receipt journal and the totals in the cash payment journal. Okay, so 167,000 is for cash receipt journal and 202,000 is for cash payment journal. So you'll come and write your totals here. So now I want us to complete the cash receipt journal. So to complete the cash receipt journal, these are the steps. You start by writing the total cash amount you received. So in our situation, they said we received 167,000. So we received 167,000. 167,000. This is our total receipt. So we also add the direct deposits. Okay, so in the cash receipt we add the direct deposits. So the direct deposit, how many direct deposits do we have? So it seems like we have several direct deposits here. We have this one, and this one. So we have Mr. K sign of 5,100. Mr. K sign is 5,100. 5,100. And Mr. S. Tole. Mr. S. Tole has a direct deposit of 4,700. 4,700. 4,700. And then we have Miss Y. Kruger. Miss Y. Kruger has a direct deposit of 3,500. 3,500. And lastly, we have Mr. K.A. Loka, who is the owner of this business. So he also made a direct deposit. Okay, so where is he? His direct deposit? Okay, they said Mr. K.A. Loka direct deposit. Okay. Here, Mr. K.A. Loka deposited 10,000 on the 31st directly into the bank account. So this is a direct deposit again. So you add 10,000. Add 10,000. So what else do we add? We also add what we call a stale check. So what is a stale check? So a stale check is a check that you paid your clients or your suppliers, and then what happened is that check wasn't been used within a period of 6 months. So if in case you don't use that check for a period of 6 months, the check will be reversed back. So when they reverse that check back to you, you will receive it. That's why it's falling under cash receipt journal. So a stale check is a check that lasted for more than 6 months. So it's 6 months plus. Okay, 6 months plus. So the check that lasted for more than 6 months. So in our situation, we do actually have a stale check. Okay, like here, 4.6. On the 3rd of November 2016, Ms. Tina Du provided a catering service to KA Furniture Stores. The bookkeeper issued check number 220. For how much? For 15,000. So this check number 220 was for 15,000 was issued to Miss Tina due on the 30th of November 2016, and we are dealing with the bank reconciliation of May 2017. So you can see that this check of 220 is a stale check because it lasted for more than 6 months. So we have a stale check of how much? Of 15,000. So you add 15,000. So you add all of these to get the amount of your receipt. So how much will be your receipt? Will be 205,300. Will be 205,300. Okay. Let's move to the cash payment. So here at the beginning they say the cash receipt and the cash payment had the totals of 167 and 202 respectively. So 202,000 is for cash payment. So total cash payment is 202,000. And then what else do we add? We add the debit orders, the stop orders. So but in our situation we have debit orders. Okay, so I see a debit order of JJ Municipality 6,500. JJ Municipality 6,500. I also see another debit order of Your Way Insurers. Your Way Insurers 2,900. So it's 2,900. 2,900 Your Way Insurers. We have the Katara Rentals. So debit order Katara Rentals is 9,000. We add 9,000. Add 9,000. Okay, so this is how we do them. We also add bank charges. So if we continue reading here, 4.7 says the bank charges for the month was 250 and the interest on overdraft was 120. So the bank charges was 250. Overdraft fees was 120. So to get the cash payment, you need to add all of these. So if you add all of these, you get 220,770. So you get 220,770. So this will be your cash receipt journal and cash payment journal. So let's move to the bank account of the business. Okay, so this is how you do the bank account. You have 6 columns. Okay, date, details, amount, date, details, amount. Okay, so this is how it look. So there is something you must know about the bank. You need to know about the balance. If they say the balance of the bank account is favorable, so if it's favorable, it's gonna be on the debit side because the bank is an asset which is positive on the debit side. Okay, so if they say the balance of the bank account is unfavorable, so it means it will be on the credit side. Like in our situation, they said on number 2 here, the balance in the bank account in the general ledger of KA Furniture Stores was unfavorable at 40,063. So the balance is unfavorable. So on the 1st of May, the balance is unfavorable of 40,063. So you're gonna come and say unfavorable balance is 40,063. And then since the bank is an asset, it's positive on the debit side, so it means it's negative on the credit side. So now what can possibly reduce the bank? So cash payment journal reduces the bank because whenever you are paying out money, the bank is decreasing. So we have to credit the CPJ. And the CPJ, how much did we get? So in our CPJ here, we got a total of 220,770. So it means the bank has to pay out this amount of money, 220,770. So we're gonna credit it like 220,770. Okay, and then what can possibly increase the bank? The cash receipt journal. So CRJ not CPJ, sorry, it's CRJ. CRJ increases the bank because whenever you're receiving the cash, the bank is increasing. So now, how much was our CRJ after the adjustment? After the adjustment, our cash receipt journal here was the cash receipt journal was 205,300. So it was 205,300. So cash receipt journal is 205,300. Okay, now to get the closing balance here, how do you calculate the closing balance? You will be like, okay, the credit balances and the debit balances, which one is greater than the other? So it seems like this balance is greater than this one. So you will be like 40,000 plus 220,000. How much will you get? And then the answer you get, you subtract with this one. So if you add 40,063 plus 220,000, 770, you get 260,000. It's gonna be 260,810. 260,833. So it's gonna be 260,833. Okay, so now 260,833 minus this balance of cash receipt will get the closing balance. So how much will be our closing balance? Will be 55533. So our closing balance will be 55533. 55533. Okay, and then if you add cash receipt and the closing balance, you should get the same amount of 260,833. And then for the fact that you closed on the debit side, so it means for next month on the 1st of June, your balance brought forward should be on the credit side because you closed on the what? On the debit side. So the closing balance will be the opening balance for the following month. Okay, so your opening balance will be 55533. Okay, let's move to the bank reconciliation statement. So with bank account, we are done just like that. So the bank reconciliation statement, how do we do it? So this is how we do the bank reconciliation statement. Okay, you should start with the balance of the bank statement. So based on our information here, based on this information, we have number 3. Number 3 says the bank statement of KA Furniture Stores for May 2017 had a debit balance of. So the bank statement had a debit balance. So a debit balance is unfavorable balance. So we have to record this with 4,970 on the debit side. So we come and say the balance of the bank statement is 44,970 because they said it's a debit balance. Okay, so debit or unfavorable balance of bank statement should be debited. Okay, credit or favorable balance of bank statement should be credited. Okay, thank you. Let's proceed. So now we also have to add the outstanding what? The outstanding checks. So we wanna see the outstanding checks for the month, and then we need to reconcile them. So it seems like on 4.1 the following checks were issued in May 2017 were not yet presented for payment. Okay, we also have these other checks here. The following checks were recorded as outstanding in April bank reconciliation statement. So April was the last month for May. So now what you should do here is that, okay, this check were outstanding for the previous bank reconciliation, What about this month? Are they still outstanding? They said only check number 441 was presented for payment. So 441 of 1,500 is no longer outstanding. So we only have two outstanding checks of 436 and 440. So this is what we're going to do. You write the check number 436. So check number 436, how much is it? Check number 436 is 11,900. So 436 is 11,900. So the checks, we debit them, because on the debit side of the bank statement, that's where we have the unfavorable balances. So the checks shows that we've been paying out money. Okay, we also have check number 440 or 14,000. So we have check number 440 or 14,000. Okay, so check number 441, they said it was presented for payment, so we skip it. And they continue saying that we have these other three checks, 456, and all of them, they said they were not yet presented for payment, so they are all outstanding, so you must write them. So we've check number 456 of 20,000. So we come here and say 456 of how much? 20,000. And then we also have check number 460 of 14,700. We'll check number 460 of 14,700. And then we also have the last check of 9,900 is check number 467. 467 9,900. So this is how we do them. So what about the outstanding deposit? Do we have outstanding deposit? Yes, we do. Okay, like on 4.2, a deposit made on the 31st of May for 65,000 did not reflect on May in the bank statement. So it means that deposit is outstanding. So a deposit of 65,000 is outstanding. So you come here and say the outstanding deposit, you come to the credit side, you write 65,000. Okay, this is how you do it. And then we have incorrect deposits. So in our situation here, we have an incorrect deposit of Mr. K.A. Locker went to the bank to deposit 5,000 into his personal bank account. A trainee bank teller at ABC Bank deposited 5,000 into K.A. Furnitures. So this man was supposed to go to Mr. K.A. Locker bank account, personal bank account, not his business bank account. So the business has received an incorrect deposit. So we need to reverse that deposit. So to reverse that 5,000, we need to debit it. So incorrect deposit, we debit it. So we'll come here and debit 5,000. Okay, we also have under recorded payment. So they said in the cash payment, this amount was recorded well. Check number 470 was correctly recorded in the cash payment journal, but according to the bank statement received, this amount wasn't correct, was under recorded, okay, as 218 instead of 281. So you need to rectify this in the bank statement. So if you under recorded something, it means you still owing. So you in the bank statement is 218, of which is supposed to be 281. So the difference between the two, you need to subtract these two. So 281 minus 218 will get 63. So it means you still have to pay 63. So the under recorded amount should come on the debit side to show that you still owe 63. Okay, and then what else? We also have the balance for the bank account. So now the balance of the bank account is the one we just calculated. Remember, on the bank account we have a credit balance on the 1st of June. We have a credit balance of 55,533. So you come and say credit balance of bank account is what? It's 55,533, and then you now add the credit side and the debit side to get your solution. So these balances should be equal. So how much will we get? So if we add, you're gonna get 3, 3, 5, and then 10, you get 0, you carry 1, you get 12. So it's gonna be 120,533, and the same applies if 8 here, you get 120,533. So this is how you do everything, guys. This is how you do everything. Thank you. So this is the bank account and the bank reconciliation statement for the question paper of November 2017. Okay, and then this is the cash receipt and the cash payment of November 2017. Thank you guys, all the best.